when Bitcoin does run, it can run kind of like what we saw gold and silver do over these past 6 to 12 months. So when it does run, I think probably would outperform stocks. The question is, does that run happen in 2026? Does it happen in 2027? Does it kind of split the difference and start happening in late 2026 and then go into 2027? I don't really know about that timing. There's like $1 trillion in market cap in the broader crypto space outside of Bitcoin, and I still think a lot of that's overvalued. So I've been a kind of a long-term bear on most crypto outside of Bitcoin and stablecoins, and I still think that's a big overhang. It's at least in the short term potentially bad for the narrative because there's just more negative news to focus on in the crypto space. You can talk about the negative impacts of meme coins. People can talk around corruption associated with President Trump's meme coin and associated crypto ventures. In the long run, I think it's healthy for Bitcoin for all these other crypto things to kind of stagnate down to closer to their total addressable market, which I think is pretty small. But in the near term, the intermediate term, while they do kind of melt and stagnate, it's hard to envision that it doesn't pull down Bitcoin to some extent.
Alden begins with what she views as the most underappreciated issue facing Bitcoin in the near term: a lack of fresh external demand. Over recent months, there has been little evidence that new cohorts of investors have suddenly decided to own Bitcoin for the first time. Instead, ownership appears largely saturated among those already inclined to hold it. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
Well, so in short, there's not been a lot of external demand. Few people woke up in the past few months and decided I want to own Bitcoin. They haven't owned Bitcoin already. So there's very little new capital coming into the space, as far as I can tell. This past summer, there were a number of treasury companies that got very overvalued. They were ones trading at 3 times net asset value, other ones trading at eight times or more of their net asset value. And so a lot of that had to come out of the market. That excess valuation had to come out of the market, that enthusiasm. So yeah, there has been kind of selling pressure. Then I think there's a little bit of a self-fulfilling prophecy of the 4-year cycle. That basically people said, well, whatever it hits in Q4 of 2025, that's going to be the peak for a while, so they want to get out. I don't think the 4-year cycle really has any more credibility to it in the way that it did in kind of Bitcoin's more inflationary earlier years, where the halving cycle was a much bigger factor. But I still think it has a psychological impact. So I think that contributed to this. We've also seen, many software names are down. So even though the NASDAQ is doing well, a lot of that recently is hardware driven.
Yeah.
As well as, kind of the big hyperscalers. And kind of these more pure play software companies have really gotten killed. They're all, they were expensive previously, and now they're kind of viewed as potentially being disrupted by AI to varying degrees. And it's possible that Bitcoin is kind of caught in that trade. I mean, I know that there were some people spooked about quantum for a while, the quantum risk. I think that is overblown in any sort of investment time horizon, but I have heard from a number of credible institutional sources that basically it used to be to say 5% of institutional allocators would ask about quantum as a risk, and that had jumped to like 30% over the past several months. And the way that works is even if an institutional investor thinks there's a low risk of a quantum computer disrupting Bitcoin security, if they say, well, it's a 5 or 10% chance in, say, a 5-year timeline, then they calculate that in their expected value outcome. So if you expect if there's a 5% chance you get zeroed out or nearly zeroed out by some sort of tech that comes out of nowhere, then that kind of disrupts your whole pricing mechanism. So I think there's been a bunch of factors that have done this, and I think Bitcoin has to work through this. But yeah, my timelines tend to be longer than what happens in a given month and a half. But I do think that it is cheap here, is how I would view it. Well, so one of the theses I've seen put forth is that once gold and silver sold off, it would allow Bitcoin to catch a bid. Kind of like how Bitcoin doing pretty well might have previously sucked some of the enthusiasm out of, say, the silver market, because if someone is interested in kind of hard money and particularly likes the more volatile hard money, then then previously that would have been people interested in silver, and they've been into Bitcoin or kind of broader crypto. And it's possible that as gold and silver and platinum have done really well, that kind of same hard money crowd says, well, why would I own Bitcoin or crypto when I can own the metals that are soaring? Now, as we've seen, at least in a very small sample, as we've seen a sell off in the precious metals, it's not been to the benefit of Bitcoin. Bitcoin also sold off. So I'm not sure that I would link them much here. I would say that I think a correlation that does matter is that I think that the broader crypto space, there's like $1 trillion in market cap in the broader crypto space outside of Bitcoin, and I still think a lot of that's overvalued. So I've been a kind of a long-term bear on most crypto outside of Bitcoin and stablecoins, and I still think that's a big overhang. And there are many entities that cross-own, so they'll own multiple different cryptos and they'll own Bitcoin. And if those other cryptos start doing poorly, they might have to just deleverage or degross their portfolios in Bitcoin as well. In addition, it's bad for the, it's at least in the short term, potentially bad for the narrative because there's just more negative news to focus on in the crypto space. You can talk about the negative impacts of meme coins. People can talk around corruption associated with President Trump's meme coin and associated crypto ventures. Some of the news that has kind of come around on that. So it kind of tracks all these negative headlines that Bitcoin can get lumped into. If Bitcoin is like virtually separate from that. In the long run, I think it's healthy for Bitcoin for all these other crypto things to kind of stagnate down to closer to their like total addressable market, which I think is pretty small. But in the near term, the intermediate term, while they do kind of melt and stagnate, it's hard to envision that it doesn't pull down Bitcoin to some extent. Now I still think that over the next couple of years, global liquidity and overall just the ongoing so-called debasement trade likely contributes to Bitcoin upside. So I'm still a buyer. I still think it's good to dollar cost average into it. I think it's probably, if we check in 2 years from now, it's probably higher than it is now. But there are some headwinds. And I think one of those is the kind of the stagnation of the broader crypto space. I'd say 2026 is a toss-up. If I say 2026 and 2027, my estimate would be Bitcoin outperforms. I certainly could be wrong on that, but that'd be my base case. The way I would put it is that when Bitcoin moves, it tends to move rather decisively, right? So in lately, that's not been good because it's been decisively kind of down. But when it does catch a bottom and shake out some of these weaknesses, so maybe people get over the quantum risk for a period of time, and they get past the 4-year cycle risk, and they get past kind of the broader crypto contagion. When Bitcoin does run, it can run kind of like what we saw gold and silver do over these past 6 to 12 months. So when it does run, I think probably would outperform stocks. The question is, does that run happen in 2026? Does it happen in 2027? Does it kind of split the difference and start happening in late 2026 and then go into 2027? I don't really know about that timing. So I mean, my approach has always been to be diversified. So I own equities both in the U.S. and globally. I've generally avoided long-term bonds in favor of precious metals. Which has served me well. To the extent that I have bonds, I generally keep it shorter term, just for a little bit of cash liquidity, dry powder. And then I've had a multi-percentage slice in Bitcoin. And that's over a very long period of time. That's done quite well, even though it's been weak lately. And I generally find that rebalancing is helpful. So when precious metals are absolutely soaring, and they become overweight in a portfolio, it's nice to kind of trim those back a little bit. When stocks are soaring, I trim those back a little bit. And when Bitcoin is soaring, I kind of trim that back a little bit, at least in my liquid portfolios. And that allows kind of structural growth without kind of getting caught up too much in any one asset class.
Alden is explicit about another major drag on Bitcoin, the rest of the crypto ecosystem. Outside of Bitcoin and stablecoins, she believes much of the trillion-dollar-plus crypto market remains overvalued. As a long-term skeptic of most alternative cryptocurrencies, she sees their stagnation or decline as an unavoidable process of valuation compression toward much smaller addressable markets.
One of the kind of the key takeaways I had in my debasement trade newsletter piece, so I called it the so-called debasement trade. And I was being a little sarcastic about it because that was like the new term that people were talking about. And my main point there is that we've been really in like a 50-year debasement trade. and that, outside of COVID, there's not really a ton more happening now debasement wise. We are in fiscal dominance, so the source of debasement is more tied to fiscal deficits than it is to bank lending. So there's been an inversion of that. And so some of the underlying mechanisms change over time, and interest rates kind of lose their effectiveness in some ways. But so basically, it's saying that we're still in the debasement trade that we've been in for quite a while. And so as it relates to precious metals, my view, so I've been bullish since 2018 on gold, silver, and platinum. For a while, platinum was kind of the dog of the portfolio, kind of going absolutely sideways for a frustrating number of years. Sometimes predicting the time in these things it can be surprising. So, for a while, I was calling for gold to hit 3,000. And if you asked me, would it hit 4,000 and 5,000 in such a rapid, short period of time after hitting 3,000? It wouldn't have been to my base case. Same thing with silver. I was looking to see $40 and $50 silver. I would not have guessed we'd touch $120 silver not that long after. So the rocket ship that these things went on was remarkable to me. So they've crashed down to levels that are still above a year ago. If you asked me what I think they'd be right now, right? So when assets go vertical in price. When these things are soaring, everybody on Twitter X is just talking about it. Everybody has opinion about either the top or that the idea that it can double again. But everyone's talking about it either way. That's when risk is super elevated. I mean, relative strength indices, like in measuring overbought status, about as high as you get with these things, or really almost any asset. And so whenever you have that kind of extreme upside potential, you risk extreme downside potential. It's kind of washing out momentum, euphoria, sometimes leverage. Right now, I think you want to see the dust settle because these things have such a wide band that they can trade in because, we talk about these being multi-trillion-dollar assets in terms of like their kind of estimated market cap that's above ground refined gold and silver. And that's true. But a fairly small amount of trading volume can really kind of dramatically change the price if traders get too much on one side versus the other side. So I think the trade got over its skis. Long term, I think, I don't think this was a bubble in the sense that I don't think, they deserve to be low, they soared up, and then it's purely a bubble and they're going all the way back down. But I do think that they got over their skis. The way I've been describing it is I think they've been structurally undervalued for a while. They finally got kind of the recognition that they deserved. I think they've kind of traded back up closer to fair value, but now they're less asymmetrical. So when you could buy silver in the teens, I view that as pretty asymmetrical because it's hard to really kind of structurally go much lower than that. But as you've seen, there's plenty of upside potential. And the same is true for gold and platinum, to varying degrees. But when you've already soared quite a bit, there's both upside and downside potential. I was on a podcast maybe a month ago or so, a while ago. I think silver was like 60 at the time, and they said, "Well, what do you think's first, $40 silver or $100 silver?" And I said, "I literally don't know. When it starts to go up that quickly, it can go either way." But the point is that when you already have gone that quickly, that asymmetry is gone. So the fact that you don't know and it becomes a coin flip is part of the risk compared to when you could buy it much cheaper. Well, so on average, they tend to move inversely. Obviously, you can see from your chart, there's other variables there. They're not perfectly inversely correlated.
Sure.
I think the main underlying issue here is likely tied to the nominee of the next likely Fed chair. President Trump has selected who's widely considered the more hawkish pick among the various picks he could have made, both in, historically in terms of interest rates and also recently in terms of say, recommended balance sheet size by the Fed, and that can affect things like liquidity. Now, there have been kind of pushback on the idea that he'll be super hawkish because he's also talked about, how AI-driven technology can create kind of productivity deflation, which allows for lower rates. So he probably won't be as hawkish as he was in the past. But it's certainly among the candidates that could have been selected. At least his historical track record leans on the hawkish side. I think that spooked markets a little bit. I think to some extent the market was kind of pricing in the idea that they'd have a Fed chair that just does whatever Trump wants, kind of like a super dove in a sense, kind of a breakdown between Treasury and Fed independence. And I think what they got is they have a somewhat more serious candidate that still might operate monetarily as they've kind of done in the past, which means some degree of independence, some degree of kind of data dependence, as they like to say, and that they might not get as dovish as kind of the extremes that they might have been pricing or might have been expecting on the far end. But I think that's probably the main variable for, and I don't think that's novel insight that we've seen, sell off in precious metals, sell off in Bitcoin, jump in the dollar from these low levels, timing wise tied to this more hawkish Fed nominee.
Lyn Alden's core message is one of patience and realism. Bitcoin remains embedded in a long-term macro narrative tied to liquidity and debasement, but it must navigate periods of valuation reset, narrative overhang, and correlation with broader markets. Timing these transitions is inherently difficult, which is why Alden emphasizes diversification, rebalancing, and long-duration thinking.